Okay, let's see. Is this working? All right, good. All right, good. I gotta remember that from now on. All right. So, hello. Not used to live streaming. I'm fixing things as I go. As you can see, I've kind of fixed my lighting a little bit, fiddled with it a little bit. I'm still working on the audio, so I apologize in advance right now if you guys are watching this. I'm surprised people even watched the last one, but okay. So for this week, I decided to look at this one stock that's been bothering me for a little bit. If you guys are unaware of this thing's called Allset eHome International. This stock has been popping up frequently for me, not like a sticking out like a sore thumb type of stock, but it's been kind of just there. And there was something that I came across before that seemed kind of I don't know. It just got me thinking about it, but it was having to do with the GME situation, where it was talking about over here, where it was talking about the threshold list and how GME was on there for 39 consecutive days. Well, this one has been on there for a little bit longer, so I don't know if this is actually going to be a short squeeze. I'm not guaranteeing or promising anything. I'm just taking a quick look at it. That's all I'm doing, and obviously the most difficult thing is to know where to start. And honestly, researching a company can be a lifelong venture, and it takes a very, very long time to research it. But you got to start somewhere. So first thing I'm going to do is break out the old Seeking Alpha. Look at AEI. Okay, so 15 million in document security. Blah, blah. What are they first? So they engage in property development, digital transformation technology, and biohealth activities in the United States, Singapore, Hong Kong, Australia, and South Korea. South Korea apparently is a very big biotech place, and biotech's really their biomedical research is quite impressive there, according to what Rita says. And if you guys want to check out Rita or Millennial down in the description, I don't know if I have it right now, but you guys can check them out down there. I usually hang out there anyways. So let's see. So designs applications for enterprise messaging and e-commerce software platforms, and engages in research of nutritional chemistry to create natural sugar alternatives products to slow the spread of disease. That's interesting. And natural food supplements, as well as treat neurological and immune diseases. The company was formerly blah blah. None of that matters. Okay, so they do a lot. They do a little bit of almost everything. I really don't understand what their specialty is, but I would imagine they're in the real estate sector, mostly because, if you guys don't know, a lot of companies want to be taxed under the real estate tax rate because it's actually lower than everybody else. But sometimes they get it, sometimes they don't. Most of them have to do certain things to maintain that type of tax rate and status. But again, I don't look at REITs. It's not an area that I even specialize in, so it's just something that's there. They saw it as a way to save a bit of money because any money that you don't have to pay back in taxes is money you save or money earned, whatever. But yeah. All right. So now that we somewhat established what it was, I know that was a mouthful and very difficult to follow. Which, don't get me wrong, I'm having difficulty following this thing as well. Let's see what's been talked about them. So co-CEO commence process for seeding majority-owned American Home REIT. Filings, capital raise, real estate filings. All right. So let's look at their filings and everything. So also, I don't have data for this. I mentioned earlier about like how GME was on that list for 39 days. The person that I asked for in MartiniRita's Discord, or both of them, one like Chris and Tempest, they have said that this thing has been on there on and off. But oh wait, no, this is Nizy. I can actually. Oh wait, no, this isn't Nizy. I can't check that on this thing. So yeah. All right. So just gonna have to take their word for it because I see this constantly, anyways. And if it keeps reappearing, that's just kind of interesting to me. So this one is nothing. All right, let's go look at their file. So this is a quarterly one. Okay. They have a lot of cash. That's never a bad thing. Kidding me? They have so little liabilities. Holy crap. Hmm. It's not bad. Where did this loss come from? Okay, so mostly from the financial income, unrealized gain or losses in security investments. So because this is a real estate company, and because last year there was the mortgage for mortgage, sorry, not mortgage forbearance, but mostly rental moratorium that stood in place. I think that's probably where a lot of their losses came from, because people just weren't paying their rent because they weren't essentially obligated to pay their rent, in my opinion. So, yeah, I mean, they seem to be surviving at this moment, but obviously when things are coming back, and with the moratoriums being sort of not really lifted, but they're supposed to be pushed back again. But I believe the Supreme Court ruled that it was unconstitutional, and they just removed that little executive order that Biden handed down. But yeah. Okay, I don't know anything about this debt stuff, so that's a hefty loss, 84 million. Okay, so this was that capital raise that we saw over here. So it was secures 32 million in capital raise. So they looks like they did that. That was a dilution event. Yeah, it was definitely a dilution event. I don't want to sign in. Okay.
Alsati Home International Inc., the company, or AEI, formerly Biohealth Activities. The company manages its principal businesses primarily through its subsidiary, Alsat International Limited, Alsat International FK Singapore Development Limited, a company publicly traded on the Singapore Stock Exchange.
Come on. Page is crashing. All right. I'm just gonna have to read this, unfortunately.
These include the three principal businesses that have been the majority of our operations: real estate, digital transformation, technology, and biohealth, as well as a fourth category consisting of certain other business activities. At the present time, our financial services activities are reported under our other business activities. Our biohealth activities include the sale of consumer products. 2. Going concern. The accompanying consolidated financial statements have been prepared on the basis that the company is a going concern, which contemplates the realization of assets and satisfaction of liabilities in the normal course of business. The company has experienced losses from operations over the past 6 months. As of for the 6 months ended June 30th, 2021, the company had an accumulated deficit of $117,799,610 and a loss of 5.
Okay, so accumulated deficit of 117 million and a loss from operations 5 million. Okay.
As of for the 6 months ended June 30th, 2021, the company had an accumulated deficit of $117,799,610 and a loss of $5,082,288 from operations. As a result, these conditions may raise substantial doubt regarding our ability to continue as a going concern 12 months from the date of issuance of our consolidated financial statements. However, the company expects to have high volume of cash in hand and strong operating cash inflows for at least the next 12 months. As of June 30th, 2021, the company had cash $59,520,000.
Okay, so Q2, they had 59 million in cash and 7 million restricted. Nah, I don't care about that stuff.
this book are solely those of the author.
As of June 30th, 2021, the company had cash $59,529,026 and restricted cash $7,396,111 compared to cash $24,965,946 and restricted cash $6,769,533 as of December 31st, 2020. Maryland Development LLC has an $8 million credit line from Manufacturers and Traders Trust Company, M&T Bank, and the loan balance with M&T Bank was $0 as of June 30th, 2021. Management has evaluated the conditions in relation to the company's ability to meet its obligations and plans to continue borrowing funds from third-party financial institutions in order to meet the operating cash requirements.
Wait,
as
what?
of June 30th, 2021.
Hold on.
Management has evaluated the conditions in relation to the company's ability to meet its obligations and plans to continue borrowing funds from third-party financial institutions in order.
Okay, so that's actually an interesting point to note. So management has decided to continue borrowing funds from third-party financial institutions in order to meet operating cash requirements. So here's a funny thing about this. It's basically like saying, I have my money, but instead of using my own money, I'm going to use your money first because that's how you stay rich. I can assure you it's not like that, but like, you know, it's just kind of weird. I think that they're just trying to hold off. Realistically, from a strategic point of view, I think they're trying to hold off using their own cash, just in case, because I think that they feel that they're in a suitable position to start keep taking on debt from other people, because they in their mind think that when things go back to normal, or they have a breakthrough innovation with some of their biotech companies, that they could basically pay it off with that sentiment in mind. They're thinking like, not how do I get my bread within the next 2 weeks. They're thinking of like, how do I keep my bread and start, like, you know, making the bread in 2 to 20 years or something like that. But that's typically how you should think about some of these things, or that's how I was told to think about in terms of like when it comes to real estate. But they do a lot more than just real estate. Keep that in mind. So
funding the company's operations is our first priority before repaying related party debtors. Therefore, available cash will be used to fund the company's operations before related party debt repayments. At the same time, management will concurrently work with the related party debtors on a plan to repay the related party loans, which are repayable on demand. During the 6 months ended June 30th, 2021, the revenue from lot sales was approximately $8.5 million and revenue from our biohealth business was approximately $3.7 million. Furthermore, the company had not defaulted on any principal and interest repayment on its loans and borrowings and had repaid one of its bank loans during the year.
interesting. So despite borrowing constantly, they were able to they didn't default on principal or interest payments on its loans and borrowings. That's actually quite interesting. For someone who's borrowing, I mean, like, unless they're using the capital that they're borrowing to pay off the old debt, which is basically them just trying to juggle with it. I mean, again, I'm not an accountant. I probably can't tell you. If you are, like, comment down below or something like that. But
as a result of management's plans, high volume cash in bank accounts, favorable cash revenue from real estate and biohealth operations in 6 months ended on June 30th, 2021, and availability of $8 million line of credit under M&T Bank loan agreement. The company believes the initial conditions which raised substantial doubt regarding the ability to continue as a going concern have been alleviated. However, we cannot predict with certainty the outcome of our actions to generate liquidity, and the failure to do so could negatively impact our future operations. 3. Summary of significant accounting policies. Basis of presentation and principles of consolidation.
that's a lot of people they hold under AEI. I've never heard of any of these companies. That's a lot. Although the company holds percentages of shares, so indirectly holds percentages of these shares of these entities, less than 50% of subsidiaries of the company directly holds more than 50% of these entities, and therefore they are consolidated into the company. That's like a word vomit there.
The preparation of financial statements in conformity with US GAAP requires management to make estimates and assumptions that affect the reported amounts of assets and liabilities and disclosure of contingent assets and liabilities. On March 12, 2021, the company entered into a securities purchase agreement with SPA with Chanhang FAI, the founder, chairman, and chief executive officer of the company, for 4 proposed transactions consisting of I purchase of certain warrants to purchase 1,500,000,000 shares of Alset International Limited, Alset International, which was valued at $28,300,000 on October 15, 2020. American Pacific Bancorp.
Yeah, this is just company history. Might come into play later, but I'm not really paying too much attention to that right now. It's not what it's not really what I'm looking for because I don't really understand it too much.
The company considers all highly liquid investments with a maturity of 3 months or less at the date of acquisition to be cash equivalents. Cash and cash equivalents include cash on hand and at the bank and short-term deposits with financial institutions that are readily convertible to an amount of cash and are subject to an insignificant risk of changes in values. As a condition to the loan agreement with the Manufacturers and Traders Trust Company, M&T Bank, the company is required to maintain a minimum of $2,600 in an interest-bearing account maintained by the lender as additional security for the loans. These funds are required to remain as collateral for the loan until the loan is paid off in full and the loan agreement is terminated. The company also has an escrow account with M&T Bank to deposit a portion of cash proceeds from lot sales. The funds in the escrow account, as a condition to the loan agreement with National Australian Bank Limited in conjunction with the Perth Project and Australian Real Estate Development Project. The company is required to maintain $50,000 in a non-account receivables as stated that amounts due from buyers, contractors, and all third parties, net of an allowance for doubtful accounts. As of June 30, 2021 and December 31, 2020, the balance of account receivables was $1,180,881 and $1,366,194, respectively. Approximately $1 million and $1.3 million of account receivables as of June 30, 2021 and December 31, 2020, under which the company uses DSS credit card platform to collect money from our direct sales. The company monitors its account receivables balances monthly to ensure that they are collectible. On a quarterly basis, the company uses its historical experience to estimate its allowance for doubtful accounts. The company's allowance for doubtful accounts represents an estimate of the losses expected to be incurred based on specifically identified accounts as well as non-specific amounts when determined appropriate. Generally, the amount of the allowance is primarily decided by division management's historical experience, the delinquency trends, the resolution rates, the aging of receivables, the credit quality indicators, and financial health of specific customers. As of June 30, 2021 and December 31, 2020, the allowance was $0. Inventories. Inventories are stated at the lower of cost or net realizable value. Cost is determined using the first in, first out method and includes all costs in bringing the inventories to their present location and condition. Net realizable value is the estimated selling price in the ordinary course of business less the estimated costs necessary to make the sale. As of June 30, 2021 and December 31, 2020, inventory consisted of finished goods from HWH World Inc. The company continuously evaluates the need for reserve for obsolescence and possible price concessions required to write down inventories. To net realizable value. Investment securities. Investments represent equity investments with readily determinable fair values. Equity method investments, equity investments without readily determinable fair values, and debt securities. Investment securities at fair value. The company records all equity investments with readily determinable fair values at fair value calculated by the publicly traded stock price at the close of the reporting period. Amarantis Bioscience Holdings, AMS, and Duray Partner Capital Holding Limited, True Partner, are publicly traded companies. The company does not have significant influence over AMS and True Partner, as the company is the beneficial owner of approximately 5.3% of the common shares of AMS and 15.5% of True Partner. The stock's fair value is determined by quoted stock prices. On April 12, 2021, the company acquired 6,500,000 common shares of Value Exchange International, Inc., Value Exchange International, an OTC-listed company, for an aggregate subscription price of $650,000. After the transaction, the company owns approximately 18% of Value Exchange. During the 6 months ended June 30, 2021, the company's subsidiaries established a portfolio of trading securities. The objective is to generate profits on short-term differences in market prices. The company does not have significant influence over any trading securities in our portfolio, and fair value of these trading securities are determined by quoted stock prices. The company has elected the fair value option for the equity securities noted below that would otherwise be accounted for under the equity method of accounting. Halista Calltech Limited, Halista Document Securities Systems Inc., DSS, Optimum Bank Holdings Inc., Optimum Bank, and American Premium Water Corp. APW are publicly traded companies, and fair value is determined by quoted stock prices. The company has significant influence but does not have a controlling interest in these investments, and therefore the company's investment could be accounted for under the equity method of accounting or elect fair value accounting.
Yeah. So, company has significant influence but does not have a controlling interest in these investments, and therefore the company could be accounted for rather than blah blah. So, they have a say, but it's like that scene from Star Wars where it's like, you may sit on this council, but we will not grant you the role of master. So, okay. So, American REIT.
Investments in equity securities without readily determinable fair values are measured at these investments and impairment loss. The company had an equity holding.
I'm skipping most through this because it's stuff that I either know about, don't understand, or just I don't see any sort of weird discrepancies there. And that's for the most part what I'm searching for, is something that seems kind of odd. And this is just them explaining, oh, we have a stake in this thing, we have a stake in this thing, we have a stake in this thing, we have a stake in this thing. So it's it's cool to have stakes and stuff, but
the company accounts for equity investment in entities with significant influence under equity method accounting. Under this method, the group's pro rata share of income lost from investment is recognized in the consolidated statements of comprehensive income. Dividends received reduce the carrying amount of the investment. when a company's share of loss in an equity method investee equals or exceeds its carrying value of the investment in that entity. The company continues to report its share of equity method losses in the statements of comprehensive income to the extent and as an adjustment to the carrying amount of its other investments in the investee. Equity method investment is reviewed for impairment by assessing if the decline in market value of the investment below the carrying value is other than temporary. In making this determination, factors are evaluated in determining whether a loss in value should be recognized. These include consideration
Are they selectively loss in value should be recognized? Oh, okay.
These include consideration of the intent. Impairment losses are American Medical liquid value. Amber targets house. Liquid value did not invest equity. But
you guys can read this on your own time. Like, this is their recent filing, but this is just each individual company, which, you know, they do their own thing. It's so difficult to track because they just have they basically have a stake in it, but it doesn't speak for the company as a whole. Because yes, one company could be failing under their roof, but the rest of their companies are doing good. Then it's hard to essentially do in one session. You have to track them all, and that's not something I could do in like this short stream. But let's see.
Limited S Capital entered into joint venture agreement with digital asset management firm Novum. Pursuant to this agreement, S Capital will own 50% of the issued and paid up capital in the Credit intends to develop and launch its maiden digital asset. Real estate assets are recorded at cost, except when real estate assets are acquired that meet the definition of a business combination in accordance with Financial Accounting Standards Board (FASB). ASC 805 business combinations, which acquired assets are recorded at fair value. Interest, property taxes, insurance, and other incremental costs, including salaries directly related to a project, are capitalized during the construction period of major facilities and land improvements. The capitalization period begins when activities to develop the parcel commence and ends when the asset constructed is completed. The capitalized costs are recorded as part of the asset to which they relate and are reduced when lots are sold. The company capitalized construction costs of approximately $0.2 million and $3.7 million for the 3 months ended June 30, 2021 and 2020, respectively. The company capitalized construction costs of approximately $1.4 million and $6.1 million for the 6 months ended June 30, 2021 and 2020, respectively. F12. The company's policy is to obtain an independent third-party valuation for each major project in the United States as part of our assessment of identifying potential triggering events for impairment. Management may use the market comparison method to value other relatively small projects, such as the project in Perth, Australia. In addition to the annual assessment of potential triggering events in accordance with ASC 360 property, plant, and equipment, ASC 360. The company applies. The company
so far I'm not seeing
properties under development or properties being constructed for sale in the ordinary course of business. Rather,
out of it. Like, if you guys are watching this replay,
properties under development.
Dear God, you guys have more patience than I do, but I don't understand any of this stuff. This is outside of like what I understand. So investment in single-family residential properties, which they would have gotten screwed last year because people just weren't required to pay. But let's see what they have to say. So into the tenants. Okay.
The company accounts for its investments in single-family residential properties as asset acquisitions and records these acquisitions at their purchase price. The purchase price is allocated between land, building, improvements, and existing leases based upon the relative fair values at the date of acquisition. The purchase price for purposes of this allocation is inclusive of acquisition costs, which typically include legal fees, title fees, property inspection and valuation fees, as well as other closing costs. Building improvements in buildings are depreciated over estimated useful lives of approximately 10 to 27.5 years, respectively, using the straight line method. The company assesses its investments in single-family residential properties for impairment whenever events or changes in business circumstances indicate that carrying amounts of the assets may not be fully recoverable. When such events occur, management, should impairment exist, the asset is. The company did not recognize ASC 606 revenue from contracts with customers. ASC 606 establishes principles for reporting information about the nature, amount. The following represents the company's revenue recognition policies by segments. Real estate. Property sales. The company's main business is land development. The company purchases land and develops it for building into residential communities. The developed lots are sold to builders' customers for the construction of new homes. The builders enter a sales contract with the company before.
Okay, so that's actually something I should note just as part of the real estate sales. So real estate main business is land development. They do have rental properties in Montgomery, Texas.
The builders enter a sales contract with the company before they take the lots. The prices and timeline are determined and agreed upon in the contract. The builders do the inspections to make sure all conditions and requirements and contracts are met before purchasing the lots. A detailed breakdown of the 5-step process for the revenue recognition of the Ballinger project, which represented approximately 70% and 99%, respectively, of the company's revenue in the 6 months ended on June 30, 2021 and 2020, is as follows. Identify the contract with the customer. The company has signed agreements with the builders for developing the raw land to ready-to-build lots. The contract has agreed upon prices, timelines, and specifications for what is to be provided. Identify the performance obligations in the contract. Performance obligations of the company include delivering developed lots to the customer, which are required to meet certain specifications that are outlined in the contract. The customer inspects all lots prior to accepting title to ensure all specifications are met. Determine the transaction price. The transaction price per lot is fixed and specified in the contract. Any subsequent change orders or price changes are required to be approved by both parties. Allocate the transaction price to performance obligations in the contract. Each lot or group of lots is considered to be a separate performance obligation for which the specified price in the contract is allocated to recognize revenue when or as the entity satisfies a performance obligation. The builders do the inspections to make sure all conditions, requirements are met before taking title of lots. The company recognizes revenue at a point in time when title is transferred. The company does not have further performance obligations or continuing involvement once title is transferred. Rental revenue. The company leases real estate properties to its tenants under leases that are predominantly classified as operating leases in accordance with ASC 842, leases ASC 842. Real estate rental revenue is comprised of minimum base rent and revenue from the collection of lease termination fees. Rent from tenants is recorded in accordance with the terms of each lease agreement on a straight-line basis over the initial term of the lease. Rental revenue recognition begins when the tenant controls the space and continues through the term of the related lease. Generally, the company's leases provide the tenant with one or more multi-year renewal options, including mostly the same terms and conditions provided under the initial lease term, subject to rent increases. The company defers rental revenue related to lease payments received from tenants in advance of their due dates. These amounts are presented within deferred revenues and other payables on the company's consolidated balance sheets. F14. Rental revenue is subject to an evaluation for collectability on several factors, including payment history, the financial, historical operations and operating trends of the property, and, if are rental differences between rental revenue recognized in amounts contractually.
Okay, so this is all I know about, so let's see.
Land acquisition costs are allocated to each lot based on the area method, the size of the lot compared to the total size of all lots in the project. Development costs and capitalized interest are allocated to based on the selling price of, if the allocation of the size of the lot compared to the total size of all lots in the project. Biohealth. Product direct sales. The company's net sales consist of product sales. The company's performance obligation is to transfer.
I don't know anything about bio. You're free to read through it, but I'm not going too deep into it. So,
The company collects an annual membership fee from its distributors. The fee is fixed, paid in full at the time of joining the membership and non-refundable. The membership provides a member access to purchase products at a discount, use to certain back office services, receive commissions for signing up new members, and attend corporate events. The company recognizes revenue associated with the membership before the membership fee is recognized as revenue.
Hold on. So you're paying this thing to get in there, and then they also pay commissions for signing up new members and attending corporate events. I like the model, especially when they're non-refundable, but I don't know. It's
Deferred
just,
revenue relating to membership.
I like it from a corporate. I like it from a corporate standpoint.
As of June 30th, 2021 and December 31st, 2020, there were no remaining performance obligations or continuing involvement, as all service obligations within the other business activity. Foreign currency. Functional and reporting currency. Items included in the financial statements of each entity in the company are measured using the currency. The financial statements of the company are presented in US dollars. The functional and reporting currency of the company is the United States dollar, US dollar. The financial records of the company's subsidiaries located in Singapore, Hong Kong, Australia, and South Korea are maintained in their local currencies, the Singapore dollar, AUD dollar, Hong Kong dollar, HK dollar, Australian dollar, AUD, and South Korean won, KRW.
They don't mention this, but there might be a little risk with the HK dollar. Yes. I don't care where you stand on the situation, but there are geopolitical issues going on there, and after what happened the previous year when they were trying to claim Hong Kong, I guess they kind of successfully did that, but according to these guys, they're not saying that outright, which, again, it's something that you have to combine with paying attention out from the outside world as well as what they're saying in these filings, but let's see if they mention it.
Transactions in currencies other than the functional currency during the periods are converted into functional currency at the applicable rates of exchange prevailing when the transactions occurred. Transaction gains and losses are recognized in the statement of operations. The majority of the company's foreign currency transaction gains or losses come from the effects of foreign exchange rate changes on the intercompany loans between Singapore entities and U.S. entities. The company recorded foreign exchange gain of $958,334 and $796,709 lost during the 3 months ended on June 30th, 2021 and 2020, respectively. The company recorded foreign exchange gain of $2,421,031 and $1,463,773 during the 6 months ended on June 30th, 2021 and 2020, respectively. The foreign currency transactional gains and losses are recorded in operations. Translation of consolidated entities' financial statements. Monetary assets and liabilities denominated in currencies other than the functional currency are translated into the functional currency at the rates of exchange ruling at the balance sheet date. The company's entities with functional currency of Singapore dollar, Hong Kong dollar, AUD, and KRW translate their operating results and financial positions into the US dollar, the company's reporting currency. Assets and liabilities are translated using the exchange rates in effect on revenue, expense, gains for the 3 months ended on June 30th, 2021.
That's not what I'm looking for.
The company maintains cash balances at various financial institutions in different countries. These balances are usually secured by the central banks and insurance companies. At times, these balances may exceed the insurance limits. As of June 30th, 2021 and December 31st, 2020, uninsured cash and restricted cash balances were $63,973,230 and $25,752,637, respectively. For the 3 months ended June 30th, 2021, two customers accounted for approximately 97% and 3% of the company's property and development revenue. For the 3 months ended June 30th, 2020, two customers accounted for approximately 96% and 4% of the company's property and development revenue. For the 6 months ended June 30th, 2020, For the 6 months ended, operating segments are defined as components of an enterprise about which separate financial information is available that is evaluated regularly by the chief.
Okay, so let's see. So they made 8 million, but it took them 6 million to make that, which gives them a net 2. Then they had to minus operating expenses, and then all that sort of stuff before. This is before income tax. Okay. Okay, so I mean, they're net profitable, but shit, I was just looking at the real estate. Okay, so they're not making any money on the digital transformative technology, which I haven't really seen very much specifications on. I just see real estate and bio, which I hate focusing on it, but I guess I have to. I have no choice. But let's see. So that's a lot. So their bio is losing them big money. I thought it was a real estate one, but apparently the real estate's still somewhat making money, but it's the bio one that's making them lose a lot of money. Okay, so that is June 20. Okay, so let's see what they did during COVID. So they made less money during COVID from real estate, but that's understandable because it happened. And what? Okay, so they reduced a lot of their other income expenses. They actually did turn somewhat of a profit during COVID, which is kind of ironic. But the funny thing is that, like, yeah, the lion's share, from what I understand, should come from the real estate. But I guess they have a big reach in the biospace, which I'm not a big fan of the biospace because it's a lot of coin tosses. You know what I mean? Bio's very finicky. If you guys don't know anything about bio, it's basically like it could be praised as the next it could be praised as the next like cure for something or whatever, or treatment for something one day, and then absolutely get chastised or thrown to the wind the next day because they failed one of their phase trials. And that's just bio. It's wild. If you guys can figure out how to, like, if you're a Harvard medical doctor with like multiple degrees, a lot of connections and people that you can talk to, I don't think bio is a very feasible thing unless you actually really know your stuff or are connected in some form to be able to ask someone that is an expert in that field that could tell you yay or nay. But again, that's not me. I'm too old to chase that stuff now. So, all right. Let's see. Okay, so they have. Let's see. Don't like how that looks on the surface. So that's real estate stuff. Their real estate makes up a great chunk of their thing, but that's not surprising. Just gonna zoom out because I can't see shit.
On February 11, 2021, the company entered into a 5-year note with M&T Bank with a principal amount of $68. 502 pursuant to the Paycheck Protection Program PPP term note under the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act. The PPP loan is evidenced by a promissory note. The PPP term note bears interest at a fixed annual rate of 1.00% with the first 16 months of principal and the PPP term note may be accelerated upon the occurrence of an event of default. The PPP term note is unsecured and guaranteed by the United States Small Business Administration.
Oh,
The company may apply to M&T Bank for forgiveness of the PPP term note, with the amount which may be forgiven equal to at least 60% of payroll costs and other eligible payments incurred by the company calculated in accordance with the terms of the CARES Act. At this time, we are not in a position. As of June 30th, 2021, we owed $68,502 to M&T Bank.
That's nothing. They have enough
Australia
cash
loan.
for that.
On January 7th, 2017, as Perth Thai Limited, as Perth, entered into a loan agreement with National Australia. Chan Tung Mo was engaged as a consultant by the company through Pop Motion Consulting Pte. Limited. Chan Tung Mo is the son of Chan Heng Fai, the chairman and CEO of our company. In August of 2020, this consulting agreement was terminated, and Chan Tung Mo became an employee of Alset International as Chief Development Officer. Chan Tung Mo was appointed as Executive Director of Alset International Limited on December 11, 2020, and on March 1, 2021, he was appointed as Co-Chief Executive Officer of Alset International Limited. Chan Tung Mo was appointed as Co-Chief Executive Officer of Alset Home International on July 1, 2021. The company incurred expense of $0 and $59,144 for the 3 months ended June 30, 2021 and 2020, respectively. The company incurred expense of $0 and $118,288 for the 6 months ended June 30, 2021 and 2020, respectively. As of June 30, 2021 and December 31, 2020, the company owed...
That doesn't spell nepotism. I don't know what is. It's like, yeah, so my dad kind of is the chairman of the company and CEO, and yeah, I'm the son that's kind of coming into there. I'm not saying that I'm not trying to sully this person or anything like that, but it's just kind of like that's just very nepotistic. Like, again, I don't know if this Chan Tung Mo is actually very capable. He could be the most capable person, or even more capable than his father, but it's just kind of weird how he just got handed that position.
On March 2nd, 2020, Liquid Value Asset Management Pte. Limited Liquid Value received a $200,000.
Actually, I kind of want to note that. So, company CEO and chairman. Co-CEO seat. Has kid done anything? It's a question to ask.
Inc. lent $560,000 to Chan Tung Mo. On June 14, 2021, the company filed an amendment to its third amended and restated certificate of incorporation as amended to increase the company's authorized share capital. The amendment increased the company's authorized share capital to 250 million common shares and 25 million preferred shares from 20 million common shares and 5 million preferred shares, respectively. The company has designated 6,380 preferred shares as Series A preferred stock and 2,132 as Series B preferred stock. Holders of the Series A preferred stock shall be entitled to receive dividends equal on an as-if converted basis to and in the same form as dividends actually paid on shares of the company's common stock par value 0.
So they went from 20 million common shares to 250. That's a massive dilution. So 20 mil shares to 250 million. That is massive.
Holders of the Series B preferred stock shall be entitled to and in the same holders of Series B preferred. On January 19, 2021, the company issued 10,000 shares of its common stock. On May 3, 2021, the company entered into a loan and exchange agreement with its chief executive officer, Chan Heng Fai, pursuant to which he loaned the company his shares of common stock of the company by exchanging 6,380,000 shares of common stock which he owned for an aggregate of 6,380 shares of the company's newly designated Series A convertible preferred stock. Effective upon the filing of the amendment in June 2021, the company issued an entity owned by Chan Heng Fai 6,380,000 shares of common stock upon the automatic conversion of all 6,380 outstanding shares of the company. On May 12, 2021, the company entered into an exchange agreement with Chan. Effective upon the file. On May 10, 2021, the company entered into an underwriting agreement. The underwriting agreement with Capital Corp. The company also granted the underwriters a 45-day over-allotment option to purchase up to 808,363 additional shares of common stock.
I'm going to skip this section a little bit. If you guys are still watching, I probably don't have that type of retention rate, but if you are still watching, you are a champ. This stuff comes into, it's very important. Don't get me wrong, it's very important, but it doesn't come into play until a little bit later. It's nice to know. It's good to know this stuff, but I'm personally choosing to skip over it right now. Like, if you're watching this, like, you guys can go through this with a fine-tooth comb. And if you guys are, especially if you guys are planning on putting any money in it, I'd say probably seek out someone who is incredibly more versed in this thing, particularly the financial advisor that has your interests at heart, and go over these things like with a fine-tooth comb if you guys are planning on even setting foot in any of in the stock whatsoever, because that 20 million share to 250 million is alarming. And this happens not at the peak of the lockdowns, but it happened post lockdowns, like the year afterwards. A lot of companies didn't actually have to do that very much to that extent, but a 12 time share dilution is just that's kind of troubling to me. All right, but yeah. All right, so this is just them selling some of the company's ownerships and stuff like that.
The company has entered into property management agreement with the property managers, under which the property managers generally oversee and direct the leasing, management and advertising of the properties in our portfolio, including collecting rents and acting as liaison with the tenants. The company pays its property managers a property management fee of $90 per month per property unit and a leasing fee equal to 1 month of each lease's annual rent. For the 3 months ended June 30th, 2021 and 2020, property management fees incurred by the property managers were $2,740 and $0, respectively. For the 6 months ended June 30th, 2021 and 2020, for the 6 months ended on April 27, 2020, Global Biomedical Private Limited GBM, one of our subsidiaries, entered into a share exchange agreement with DS. On August 21st, 2020, the transaction closed and Impact Biomedical Inc.
So they're making some money off of the sales of their company, but like this seems like just to generate them some cash. Not really making a lot of money out of it, actually. Okay, yeah, this is the one I was looking for. So let's see.
Financial assets measured at fair value on a recurring basis are summarized below.
Feels like a real estate company that's just kind of trading its shares of its companies and stuff like that. Which, you know, if I was to argue anything, I'd say they should have leaned a little bit more into the real estate. That's just my personal opinion. But the bio one is okay, but you have to like those things might lose you money for like years upon years or whatever, right? But if they do hit a breakthrough or some sort of innovation, they could be worth it. But I don't know enough about that space. It's a convertible preferred stock. Okay. Yeah, so that's a lot of their holdings in other companies, and that's where a lot of their values derive from. Trading stocks. They're actually trading. That's even more scary.
On February 26, 2021, the company invested approximately. The interest rate is 2% per annum in mature. On March 2, 2020, the company received warrants to purchase shares of Amra, a related party private startup company, in conjunction with the company lending a $200,000 prom.
All right. Honestly, I don't know about you, but I'm kind of losing interest in this a lot because of just based on what I'm seeing so far. Yeah, this is other management notes, terms.
This Form 10-Q contains certain forward-looking statements within the meaning of the Private Security. For this purpose, any statement. Al-Sadi Home International Inc. is a diversified holding company principally engaged through its subsidiaries in the development of e-home communities and other real estate, financial services, digital transformation technologies, biohealth activities, and consumer products with operations as United States, Singapore, Hong Kong, South Korea, and Australia. Our growth strategy is to pursue opportunities that we can leverage on our global network using our capital. We manage our principal businesses primarily through the extent to which the COVID-19 pandemic may impact our business will depend on future developments, which are highly uncertain and cannot be predicted. The COVID-19 pandemic's far-reaching impact on the global economy could negatively affect various aspects of our business, including demand for real estate. From March 2020 through June 30th, 2021, we continued to sell lots at our Ballinger Run project in Maryland for the construction of townhomes to MBR. Sales of such lots to MBR increased in the first 6 months of 2021 to 58 compared to 46 lots sold in the first 6 months of 2020. Such townhomes are often a first home that generally did not require buyers to sell an existing home. We believe low interest rates have encouraged home sales. Many buyers opted to see home models at the project virtually. This technology allowed them to ask questions to sales staff and see the townhomes. Home closings were able to occur electronically. We have received strong indications that buyers and renters across the country are continuing to express interest in moving from more densely populated urban areas to the suburbs. We believe that our Ballinger Run project.
This thing was true back in the day, but those who could moved out of the cities already. They can't. Those who couldn't were just basically stuck there. And these guys are basically saying that they're still trying to move out of the urban centers, which, you know, I mean, like, there could be an argument for, but for the most part, I think that wave is kind of done, in my opinion. But I don't know, with the property prices within cities, if these are at a more attractive price, these guys might take a hit in terms of whatever their projected profit line is. But honestly, it seems
We
like a
believe that
more
our Ballinger Run
complex.
project is well suited and positioned.
Sorry, it seems like a more of a complex situation than I could probably summarize in like the next 2 minutes. But yeah, I'm not
To date,
too
we experienced a
interested about
slowdown in the construction of a clubhouse at the Ballinger Run project during the earlier part of the pandemic, which was completed behind schedule. We believe this delay was caused in part by policies requiring lower numbers of contractors. The COVID-19 pandemic may adversely impact the timeliness of local government in granting. Accordingly, the COVID-19 pandemic, most of our U.S. staff works out of our Bethesda, Maryland office. At our office in Texas, we received a 50% rent abatement for the month of May 2020. Our U.S. staff has shifted to mostly working from home since March 2020, but this has had a minimal impact on our operation. Our staff in Singapore and Hong Kong has been able to work from home when needed with minimal impact on our and our staff's travel between the U.S. and non-U.S. offices has. The COVID-19 pandemic has reduced the frequency with which our management would otherwise. Management continues to regularly supervise the Ballinger. Limitations on the mobility of our management and staff may slow down our ability to intern. We have not reduced our staff, and to date, we did not have to expend significant resources related to employee health and safety matters. We have a small staff, however, and the inability of any significant number of our staff to work due to illness or the illness of a family. In addition to the matters described above, the primary challenges and trends that could affect or are affecting our financial results include our ability to improve our revenue through cross-selling and revenue-sharing arrangements among our diverse group of companies. Our ability to identify complementary businesses for acquisition, obtain additional financing for these acquisitions if and when needed, and profitably integrate them into our existing operation. Our ability to attract competent, skilled technical and sales personnel for each of our businesses at acceptable compensation levels to manage our overhead, and our ability to control our operating expenses as we expand each of our businesses and product and service offerings. Results of operations. Summary of statements of operations.
More statements of this stuff. Yeah, don't care. Yeah, so like I said before, bio is kind of a wild card. This bio company they have is basically just seemed like they just basically went under. Yeah, so they just offloaded it to someone. It looks like 74 had a net loss of 74 million compared to the net loss of 2.4 million in 3 months in June. Okay, so what I think of it so far is mostly, yes, they are a holding company, but they mostly make their money from real estate, but they're not too focused on real estate because they want to be diverse. And by being diverse, they're putting money towards essentially gambles, in my opinion, for these biotech companies, which I'm not too thrilled about because, like it has to be encompassed within their ability to kind of like foretell whether this company is actually going to be making some sort of progress or not. As we saw with the last bio company that was mentioned there, it was originally about a four something whatever, like a couple $1 million loss, and then it became a $74 million loss like a year later when they finally were able to offload it. And honestly, it just seems like they're just burning a lot of cash throwing into these bio companies when they should, in my opinion, they should focus on one or at least have enough of the real estate income that overshadows any sort of losses that they have, which doesn't seem like the case. And yeah, I can't really pull anything out from the filing, so let's just go look at what they have from the other side. All right, so there's a narrative right now that says they're at a 54% short. Okay, so failures to deliver. Yeah. That's a lot of failures to deliver. Yeah. That is high. That is a high amount of failures to deliver. So failures to deliver is basically when, basically, it's when you guys make a trade and what happens is that the DTCC or someone in between has the reasonable expectations that they can get those shares to you, so they do the trade anyways, and therefore some artificial shares kind of pop up there. But for the most part, they are the inability to deliver those shares, hence the name failure to deliver, right? And what happens is typically like, trades get broken. Some people have to close out the trades. Some people can't get out of their trades, and it's just like a whole chaotic mess. And typically when you have like high failures to deliver, you get a situation like this. And I'm not saying that it is exactly the situation. I'm just saying it just seems very odd, like odd and interesting at the same time. Like this is just for, again, for research purposes only. You guys do whatever you want, but like this was GMEs, and they had like massive failures to deliver constantly. But at the same time, the difference between this AEI and GME was that GME had a lot of cash. They didn't have a lot of debts or anything like that, and the company AEI over here has basically said that, yeah, we're going to just keep borrowing cash from people. We have a lot of cash on hand, but we're not exactly using it a lot, and they don't have a lot of profitable models. Like, again, I hate having to defend GME in this situation, but the fact was that their whole business of reselling games, and like, if you bring in a AAA title game that you paid like $50 for, and again, this is just business, but you paid $50 for, they'll say, cool, $10. You trade it in, and then they resell it for like $30, whatever, right? So they just made a $20 profit on that thing, and like a 200% return right there, right? 200-300%, whatever. But this company, again, anything can happen, especially with biotech stocks. But like, it just seems more like a gamble to me. I mean, you're more than welcome to do whatever you want with it. Like, I'm not saying you should or shouldn't do anything, but there was something else I wanted to look at. So the NASDAQ. What institutions are actually crazy enough to hold this thing? Yeah, so not a lot. It's basically dead. This, like, yeah, there are some like prominent names on here, like Vanguard, BlackRock, Credit Suisse, State Street, all these other places. But like, yeah, these percentages look big, but like if you look at the big picture there, it's not a lot. It's a very small holding. Like GME had like a larger holding, like over like 100% institutional ownership or whatever, because it was accounting for all those shares that were basically artificially created, allegedly. But this one doesn't have that type of factor. So having like a 3 million kind of like short squeeze situation is not, it's not probable. Like 3 million of the 250 million shares. Like, let's see how much that is. So 3 blah 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 divided by 250 million. Actually, what's the share float right now? So that's 1%, but what's in their float? Okay, so they have a 20 million public float right now. So that my calculation's wrong. So 20 million. So 15%. Again, not that huge. So let's see what short squeeze. Again, the problem with Naked Short Report is that it does the daily volume. It doesn't actually tell you the whole picture. And the problem with this one is that it's at least 2 weeks delayed, but it's the closest we'll get, right? So let's see. Yeah, it's not even that high. It's like 2.8%. They decreased it by 40%. Yeah, it's not even a lot. Oh boy. Let's see what the social sentiment says. Okay, is the social sentiment not even allowing it? Yeah. Maybe it's just because I'm not logged in. Yeah, it was because I wasn't logged in. Alright, well, let's see what the social sentiment says. 2.9 defense. I should probably put the stock ticker for you guys. AEI stock. Okay, so this is what it looks like right now. It basically completely got shat upon. This is around the time when they had that offering, and then this is basically post of what happened when people realized. But let's see. See, this is the problem I have with a lot of people. It's just that like you get a modicum of a bump here. Like you get a modicum of a bump here, and everybody's treating it like, oh my god, it's gonna go to the moon and everything. They're over exaggerating such small like little moves. Like if you want to see a good move, like look at where is it? Like you want to see a significant move. These are significant moves. This is like when Amazon announced the partnership with the firm. Like this, these are the monstrous moves. That's an actual move. Like from $67 to 100 the next day, and then from 92 to like 123, and it's like 115 now. That this is it's like a 70% gain. That's a move. This thing that they're talking about, like about how AEI's, let's see, AEI went from, let's take this as a reference point. Yeah, it's up about 50%. It's only up $1. Cool, but look at where it fell from. So that's a 61% loss. It's another 60% loss, and so forth. But let's compare it to this thing. Oops. This is a 60% loss, or $71, and then a 69, 120% gain, or $69. And then we have this thing. Oh, I didn't zoom out far enough, but this is almost a total loss of capital. from like upper, what was it, 27.50 or something like that. Yeah, 27.50 down to $3. I can't even describe it anymore. It's so stupid. At least in a firm's case, this thing's relatively new and it came back. But like this thing is just, a firm actually has a solid business model and now basically partners, but AEI, I've never heard of any company that were listed under the sun for them. But I mean, like the only thing I would say this is even worth it is that the only thing I would say is that for this thing is, someone buy something. One second, this might be interesting. Who bought this? Oh yeah, this is the dad. Is this? Hang on, 6-9. No, that's not it. Let's see. Who's the beneficiary of this thing? Oh, DSS. This is someone they did business with. So let's see. Oh, okay, yeah. No, this is for a totally different symbol. All right. It just looks like a dance around with a different symbol, but yeah, I don't know. Like this guy, I don't know much about this guy Changfai Ambrose. Let's see who he is. There's no bio about him. Sure. Just a developer, it seems. Nothing notable. Yeah. I don't know about you guys, but I'm not too enthralled about this thing. I thought I stumbled across something, but sometimes it just turns up flat. But yeah, I don't know if you're watching the stream, especially to this point too. If you are, you are a real champ. I know this stuff is very dry, but this is the stuff that like where you make a lot of money from, because if you're able to fish out something that is interesting about a company, like Grant, don't get me wrong, like if this company was actually being super net profitable, like they didn't have the bio stuff, and they are where they're at right now with like actually just 20 million shares outstanding in their float or whatever, and they were just like they had that amount of short, I would say yeah, this would probably be a decent sort of like projecting wise, but this would probably be a decent thing to look into. Again, it's up to you to make your own investment decisions and stuff like that, and you know the consequences of which all fall upon you, the individual investor, no one else. But yeah, I don't see it. Like it seems like they're just taking the, like I said earlier, they're taking whatever real estate revenue they have, and they're just YOLOing it into biotech stocks. Which, granted, I could be wrong in like 10, 20 years, but for the time being, right now, I'm not looking that far in. I'm not looking that far, and yeah, again, like we saw what happened when the global pandemic happened, and this it basically a lot of their income just got shot because no one was paying their rent. No one was obligated to pay their rent. Like I don't know how bad it was in mostly in Asia and stuff like that for their rent situation, but yeah, if they're opening up property in Texas and stuff like that, they should be relatively fine. But again, all that stuff kind of takes time, and at the rate they're borrowing right now, yes, they can and are paying off some of their debt. I just don't think that there's any sort of long-term benefits for this company at this current time, until they present something new. That's my stance I'm taking on this right now. And again, I changed my stance like almost instantly, so you guys got to make up your own decision on that subject. So yeah, I think that's all I wanted to say. But thank you for watching the replay, because apparently no one showed up today. But hey, if you like some of the content or you want to look at some of the shorter form content, I'm probably going to be streaming every Friday now around 10 or 11 Eastern. Feel free to join, argue with me, spat at me, or whatever. Like I didn't do a good job promoting this right now because I have things on my mind. But yeah, sign up for my subscribe star down below. I'm going to start adding some of the other stuff that I actually have in play. You get access to some of the research stuff, or you know, just as general support down there. It's nice. But yeah, all right. I'll see you guys in the next one. But thanks for showing up, or thanks for watching if you guys have watched this far. But yeah, bye.